Down and bear market are unavoidable. It's part of the market cycle. It's often relatively short, especially compared to the bull markets, but seeing your portfolio in the red is very nerve-wracking. In the last few weeks, my portfolio hit the red and down to the negative. Some of the companies that I'm holding, like Meta, Alphabet, Target, and even Microsoft, reached down below my cost basis, and they just keep going down. So, what should we do when the market is down? The first thing that you should do is don't panic and keep calm. But for real, don't panic and keep calm. Don't lock in unnecessary losses and go back to your investment thesis and understand why did you invest in this company. This is the time to realize that if you didn't understand your assignment, a sharp drop or a high volatility will not be part of your investment decision. Definitely easier said than done. Next, try not to time the bottom. Time in the market beats timing the market. It's best to keep in mind that during an economic slowdown, it's normal for the market to have a negative days, weeks, months, or even years. It's part of the market cycle. If you're a long-term investor, meaning you're planning to invest for about 5 to 10 plus years, down market should be the best time to buy and increase your position and take advantage of dollar cost averaging. By buying stocks regardless of the price, you're locking in low cost basis when the market is down. Over the long run, your cost will average down, leaving you with a better overall cost basis. Depending on the company that you're investing in, if you try to time the market, you already miss the profitability of the down market. Most importantly, this is not a financial advice and I'm not a financial advisor. So be sure to do your own research and consult your own financial advisor before investing your money. Later in the video, I'll show you how I use this info on my portfolio. Okay, we're going to dollar cost average, but next question is, what company should we buy? During an economic downturn, people will generally lower down their consumption of non-essential products and services. This is to save cash. So between buying a new 8K TV and buying necessities, I'm definitely going to buy that new 8K TV. My PS5 definitely need that. No, I don't have PS5. I don't have money for that. That's actually an extreme example, so take it lightly. But for real, you can play defense by buying stock in the defensive industries. They provide consistent dividends and stable earnings regardless of the overall market state. Because people will still use their products even in hard times. No matter what the state of the economy, you still need to wash your clothes. You still need to brush your teeth, right? Defensive companies are companies under consumer staple like Procter & Gamble, Coca-Cola, Pepsi, and Clorox, which most of us kababayan are familiar with. If we're just meeting today, hi, my name is Ron and welcome to Pinoy Stock Investors, where we help our kababayan start their investing journey. Another way how to invest when the market is down is to focus on your long-term goal. Down market will definitely test your resolve as an investor. You might ask questions like, am I making the right decision? Is my strategy correct? How can I protect my investment? These can be answered by focusing on your long-term goals. Yes, this period makes you question if you're doing the right thing when it comes to your investment, but you probably won't have to wait too long for the markets to recover. If you look at how long bear markets are, the average bear market lasts about 289 days. And if you're investing for a long-term goal like retirement, the bear and down market that you will endure today will be overshadowed by the bull market moving forward. Do you think 289 days is too long or too short for you to dollar cost average? Let me know in the comments down below. And if you're getting value in this video, please hit the like button and subscribe to my channel. So, how do I use this info on my portfolio? While the market is experiencing a downturn, I'm consistently buying and increasing my position in each of the companies that I own. Here's a quick portfolio update. Currently, I own 9.15 shares of Micron Technology with a cost basis of $79.15 per share. I'm down about $77. Google with 0.37 shares with a cost basis of $27.77. I'm currently down about $233. Starbucks with 14.76 shares and a cost basis of $85.22. I'm down about $164. Home Depot with 3.64 shares with a cost basis of about $320 per share. With the recent retail downturn, I'm down about $57. Right now, I'm dollar cost averaging down on these companies to increase my position and pull down my cost basis. Starbucks and Home Depot also have a higher dividend yield since their price went down. I also own 6.76 shares of American Express with a cost basis of $143. This gives me 3% of gains with a total value of about $154. Target with 7.63 shares with a cost basis of $224 per share. They also got affected by the retail sell-off. The past few days, their stock price went down at about 25%. I bought some more Target stock to increase my position and lower down my cost basis. I also own Meta with more than 7 shares. and a cost basis of about $306 per share. I'm down about $816, which makes Meta my top losing stocks, but I still dollar cost average to increase my position and lower down my cost basis. I also increased my position in Stag to 50 shares at about $36 per share. Right now, I'm down about $160 in Stag. Kroger with 36 shares and a cost basis of $41 with 27% of gains. AV with 12 shares and a cost basis of about $116. I did sell 5 shares of AV last April to cash in some gains and to fund my purchase of Starbucks. I'm also increasing my position in Pfizer with 36 shares and a cost basis of $39, giving me more than 35% of gains. Pepsi with 11.59 shares and a cost basis of $155 per share. Realty Income, the monthly dividend paying company, with 35 shares at a cost basis of $61 per share. I consistently received $8 dividends monthly from Realty Income. Johnson & Johnson with more than 12 shares at a cost basis of $160 per share. Next is Coca-Cola with 30 shares at a cost basis of $53 per share, giving me 22% of gains. Bank of America with 59 shares at a cost basis of $32 per share. Microsoft with 14.79 shares and a cost basis of about $254 per share. Currently, Microsoft is down from its 52-week high, and I did buy some share to increase my position. Berkshire Hathaway with 13.15 shares with a cost basis of $294 per share. Currently, Berkshire Hathaway is the second highest on my portfolio with a total value of $4,206. Apple with 35.18 shares is the highest stock on my portfolio with a cost basis of $126 per share, giving it a total value of $5,278 and a gain of 18.72%. One way to have confidence on your portfolio and not panic when the market is down is to learn the fundamentals and understand how the company is making money. In this video, we talked about 8 fundamentals that you need to learn to make money when you're investing.